Bitcoin falling more than 30% since peaking near $69,000 on November 10th. Sellers are dominating the market, but if you're a holder, what can you do about your BTC? Joining us now to discuss is Mauricio Di Bartolomeo, co-founder and chief strategy officer at Ledn, a financial services firm for holders. Hello there, Mauricio. Thanks for joining us. So first, what's your outlook on Bitcoin during this sell-off we've seen in the broader crypto markets? How long do you think it'll last?
Hi, Christine. Great to see you. It's a great question. I think if you look at, and just going off of some of the points that the earlier guest was making, I think some of the price action that we're seeing recently is largely driven by some of the caution that some central banks are starting to, exercise in some of their monetary policy, and that the Fed doubling the speed of their tapering plans is certainly going to put some pressure on equity markets in general, and that whether we like it or not, there's starting to be a correlation between Bitcoin and the broader equity markets, and even Bitcoin starting to react to fiscal policy announcements. So, there was an inflation number that came out, I believe it was last week, and immediately when the inflation number came out, you saw moves on the dollar index and on Bitcoin, which is typically what you start seeing when there's algorithmic trading around some of these headlines in some assets.
Mm-hmm. So if you're not selling and you're just holding, your company proposes a way to make your Bitcoin liquid. Tell me a bit about that.
Yeah, it's a great question. So what has been true throughout history is that while central banks ebb and flow in terms of money supply, over time, money supply just tends to grow. That's just the nature of fiat and the way it's structured today. And that's why there's so much excitement around Bitcoin and its finite supply. When we launched Ledn, our flagship product was a Bitcoin-backed loan. And this was a product that people were using to access financing when they didn't want to sell their Bitcoin for many reasons. And one of the big reasons is that in many cases, selling your Bitcoin when you've built up a large gain creates a taxable event for you. And so when you put it as collateral, you were able to borrow dollars and then diversify some of your holdings into a different asset. What we started seeing was a lot of our clients, especially in the last 6 months or so, were starting to take out these very big loans to purchase property. And a lot of them were coming to us and saying, well, it would be great if I could use my house as part of the collateral for this loan that I'm taking. And I could then, purchase a house. And I'm also having a lot of challenges accessing a traditional mortgage with a bank. And so we started working with some of our, top clients, a couple of our pilot cases. And we started working with them to put together a structure to make this product a reality. And then they started getting really excited. And they said, I have friends that are very interested. Could I put them in touch? And so slowly we started noticing that the demand for this product was actually snowballing. And so what we did is essentially we put together the program, and now we announced it we announced our wait list. It has so far surpassed our expectations, and we're working very hard to bring this product to market to Canada and the US next year.
So what are the risks involved? For instance, like if your crypto's value falls, do you have to pledge more crypto?
Yeah, so in the way a standard Bitcoin-backed loan is structured, of course, to hedge against the volatility of Bitcoin, what Ledn does and other crypto lenders do is we advance a dollar amount that is worth half or 50% of the value of the Bitcoin that you're placing as collateral. So what that allows is that it gives some flexibility to price movements before the borrower has to then top up and send additional Bitcoin. When you add real estate to the collateral mix, it actually improves the stability of the value of that collateral. And what that allows us to do is provide more generous times for the client to essentially meet their additional collateral requests. And that is, in many ways, one of the big advantages of having real estate now as part of the collateral.